I will get right into it. Doreen, what is this whole barometer thing about? When I remember back in school, I have a different description of what a barometer is. But just tell us what this trade barometer is and how we play in as Stanbic and Standard Bank.
Thank you, Annette. So the Stanbic Bank Africa Trade Barometer was conceived out of the intent of trying to make sure that we create Africa's leading trade index. And this came up as a result of us realizing that indeed there's a vacuum when it comes to the information on trade, when it comes to the Africa regions, and also Uganda in particular. Reliable information is missing. But also the main reason as to why this actually comes to our country and for it to be something that can be trusted is we took a direction of having an in-depth look into the small SMEs, because usually the trade surveys that are done in Uganda on the African continent are skewed by the large corporates. Because when you look at a large corporate, if you go out and look into their trade dynamics, you'll find out that they are doing large volume. So if you speak to a trade multinational, the information is skewed. So we thought we'd take advantage of creating a magazine or a survey that now takes a look into what the small businesses do, how they look at trading in the countries in which they trade. And so that is one of the center things that we did around the trade barometer. But also, when you take an in-depth look into the actual information in there, you'll find that we agreed to take a look at about 7 thematic themes that are important to the businesses that we spoke to. You'll find we're talking about trade openness, we're talking about the macroeconomic stability of the country. In there, we talk about the behaviors of the trade people that we looked at. We look at the infrastructure, so it's looking into how do all these come together to create something for the small SMEs and what is their feel with what is going on in their countries. So in a nutshell, Annette, this is a dynamic and insightful survey that is supposed to help and inform how to help the SMEs in the respective countries that they deal in, but also as a bank, how can we come and partner with them to make their lives better? That is what the Trade Barometer is really about.
Fantastic. Thanks, Doreen. And I like the fact that it's centered around the SME, because in Africa and in Uganda, ignore SMEs at your own peril, because they are the growth engine of this country. So thank you, Doreen, and I'm sure a link has been shared of the Trade Barometer with everybody in Going Digital. Please just check out that link and actually read about the Trade Barometer, and we trust that you will represent us fairly on what the barometer says. From the barometer and from the results, many of the businesses are looking to do business beyond their boundaries, and they're looking to take their businesses to the next level. In terms of infrastructure, what are your thoughts, and what are some of the things that you see that are happening in our country to try and enhance that, and just give us your thoughts as our SME lead.
Thank you. Our SMEs really rely on the infrastructure in place to trade, to operate. For them to generate any money, there has to be ease of movement of goods, whether it's across the border or internally. The government over the last couple of years has gone through a mass infrastructure development, starting with the major highways. I think for now, those going to Sudan or goods going to Sudan, if you take a picture of 10 years before or 8 years ago and now, it's much easier to get goods into Sudan. It's much easier to get goods into Congo. The highways into Congo are now built, whether it's through the Bundibujo side, whether it's in Arua, so there's been investment in the highways. Now, where we are struggling and where some of the SMEs are struggling is the feeder roads, the ones linking into the highways. That's coming from your rural areas. It's a massive cost. Being a dominant agricultural country, that's definitely a piece that the government needs to do work on. If you look at our rail infrastructure, there's definitely investment that's happening. It's going to take time for the standard gauge railway to have meaningful benefit for our local SMEs. because it just hasn't really crossed into the country. That's supposed to be the cheapest form of transportation. So there is still, there's work that has been done. There's a long way to go. Now, when I come into Kampala, which is the center of trade for the country, I think we've all seen the porthole exhibitions that have happened. There is work that's ongoing to try and fix that, but it's not happened at the speed that, so you can see from the barometer itself, the confidence in the infrastructure, or it doesn't matter what has happened. What does the SME think? The SME thinks our infrastructure journey has come down. Now, if that's because we have centered around Kampala, depending on which SME you interview, if outside my shop there's a big pothole, that's the image I'm going to have of the infrastructure of the country. It's such a critical piece for us to get the SMEs, or to get trade operating effectively. There is work. You cannot discredit the work. Can the work be faster? 100%. But yeah, so I do hope I've answered your question. If you think about the expressway, for example, how much has that impacted? Significantly, because we had an airport, and it would take you hours to go from the airport into the city for any goods that are coming from that side. Today, 20 minutes. So, again, significant work, but quite a bit of a journey. But if you ask an ordinary Ugandan on the perception, that work may not look as visible because outside that door there's a massive pothole outside that door, and for him, if his truck if he's changing his tires every other day, if he's it's a barrier to trade for them. So you can't disregard or discredit the value of infrastructure. That would be my point of view.
Fantastic. Thank you, Aaron. Phil, I'll come to you. Cash and cash availability is still a big factor in enhancing trade, whether it is physical cash or electronic cash, whichever way. And there has been a major challenge across the region in terms of availability, especially of the greenback. Are we ready to handle these challenges of lack of cash? And if not, what's your view in terms of how long this will take to gain a certain level of normalcy?
Thanks. Thank you very much. Cash is obviously what we use to trade and what our customers use to trade. And there's context around it, really. If you look at Uganda, for instance, there's been liquidity on both fronts, shilling and dollar, what you call the greenback. It's the United States dollar, for clarity. There's been a few regional challenges, and those challenges are really coming from a difficult economic environment globally. First, we had COVID that threatened investors, and it affected investment flows into the region. And we're speaking Kenya, Uganda, Tanzania. And then we've had inflation, and that inflation has been locally here across the region, but also globally, on the back of which policymakers, the central banks, have raised interest rates to 22-year highs across the world. And that has had an impact on how much dollar inflow these markets receive, all our markets receive, because investors have gone to higher interest rates in the Western world. Now, coming out of that, what we're seeing now is that inflation is basically being managed. I think local inflation is very low, and central bank policy has been quite effective. And that is a trend that we're seeing across the region. And in tandem, to the extent that the European Central Bank, the United States Federal Reserve start to lower interest rates in their part of the world, the expectation is that we will see a gradual return of investors into our markets, because there'll be an incentive for them to come back to Africa in material size, which ultimately means that dollar supply, and specifically for markets like Tanzania and Kenya, will improve over time as policy decisions there also change. It's very important to highlight that in Uganda's case, Uganda has been a very impressive market in as far as dollar supply is concerned. Compared to the rest of the African markets, other than South Africa, Uganda has had the most available dollars in terms of liquidity, and our currency has performed fairly well compared to all the other markets. And we give that credit to the policymakers at the central bank. So in that regard, I think that the outlook is positive for the region, and that it's not lost on all the economists across the region in Kenya, Uganda, Tanzania. It's not lost on the governors across the region. And the right policy decisions are being made right now to support the supply of hard currency or United States dollars into these markets, and to make sure that the currency is freely tradable, because ultimately that allows the traders and various businesses and the manufacturers to buy and sell the currency as they want to, and to import and export, because you can't export or import from a market where you can't easily trade. So trade is key. The economists are aware, the policymakers are aware, and the right policy decisions are being made. It's just important to appreciate that the world generally is coming out of a very difficult place, and that has had a massive impact on some of the things that we've seen in the last couple of months and years. Thank you.
Thank you, Phil, for those insights. Doreen, I'll come to you regarding trade in the region. The Uganda-Kenya corridor is one of the most vibrant in the region in terms of trade. And what are some of the key insights that this trade barometer highlights from that region? And what can you share with us in terms of a bit of opportunity and growth areas out of the Uganda-Kenya corridor?
Thank you, Annette. So it's interesting that when you look at the statistics of trade in the region, that indeed, much as we trade a lot with China and the like, the actual trade is happening between ourselves, which is something that is really beautiful. And Kenya takes the pie, the largest bit of the pie, when it comes to that trade. Of course, we've had our ups and downs, but most importantly, I think we have noticed and what has come through the trade barometer is that trade is basically done on cash basis. Either it's because we lack trust amongst ourselves or something that we need to understand, but basic trade between ourselves is done on cash basis. So we are now trying to see how we can move the businesses into the actual structured sort of trading that happens on the international scene. But for now, it's done on cash basis. We send a lot of money between ourselves. So banks, and now Stanbic Bank in particular, is positioning the bank to make sure that we actually tap into that business and make sure that we pick out what we need to pick out. The advantage we have is a presence in all the major East African countries. And because of that, we are leveraging that presence to do something amazing. And in here, you'll see that we have the borderless kind of transactions where someone sends money and it's instantly seen on the other end of the country, be Kenya or Tanzania or any other country that you try to deal with. But the spotlight on the Kenya and Uganda trade, the information we got from the barometer is that both sides of the boundaries are speaking to their government to do better. So when you look at Kenya, it looks like they have better tax rates, which is enabling the businesses that side. But the information we got from the Ugandan side is that there's a plea to government to help when it comes to the taxes, because we seem to be paying more taxes than the Kenya counterparts. That puts the Ugandan small-scale businesses at a disadvantage, because then their profits are eroded by the high tax rate. So they are, on the Ugandan side, they're actually requesting for the government to come in and do something about the taxes. But on the Kenya side, what is interesting is then their request is now to help out on the currency issues, because they have a US dollar liquidity issue at the moment. So they're putting the government to task. What can you do? Because Uganda seems to be doing it well. How can you pick from the Ugandan side to also help us better the situation? So I think we are cousins when it comes to the region. So we have a lot of interplay. We import a lot from Kenya, but we also export a lot to Kenya, and ours is mostly foodstuff. So the relationship needs to be cemented. The business guys have spoken. So now we are waiting on the government to come through and listen to what both ends are saying, because they've seen good things on each other's side, and they ask the government to emulate the same and bring them to table and resolve some of the issues that both traders on different ends are asking their governments to do. Thank you.
From your expert opinion, how do you think the discovery of oil in Uganda has affected trade in Uganda? Trade or, okay. Yeah.
Thanks. That's an interesting question, and I think it's one that's close to every Ugandan's heart, because oil is supposed to change the lives of Ugandans overall. There's a couple of things we need to take into account. One is that given where we are now and the discovery of oil, what's happening right now is investment, one, in the infrastructure that will get the oil out of the ground. And therefore, to that extent, what you're likely to see a lot of is employment in the infrastructure side for now. That's what's driving the roads, the rigs, the hotels, etc., the apartments that you see coming up. That's the current thrust of the oil, and that, to the extent that we see that investment coming through over the next couple of years, as far as government is concerned, first oil should come out around 2025, 2026. The multiplier, the impact that we see coming out of that investment into this sector should create significant amount of employment, and therefore also stimulate trade, because the more money people have, the more things they buy. So it's positive for the economy, and we're quite hopeful that that timeline will be honored. Post the first oil, then you get into a stretch where the country hopefully is exporting this oil, and the revenues come back into the economy, and then the government has enough money to actually further extend social services, schools, hospitals, roads, etc., and create employment for all the Ugandans. So first phase is investment, then the next phase will be to recap that investment as the money comes through. And the numbers we're seeing, we're supposed to see, up to 15,000 jobs in some, according to some sources, employment being created on account of that. If we look at it from, a currency perspective, it's a significant amount of investment. It's about $15 to $20 billion over the next couple of years. It's important to acknowledge that a fair amount of this money will be effectively transacted in dollars, because you're not going to buy rigs from Uganda. We're importing these rigs, so that some of these transactions happen away from Uganda. But it's also important to acknowledge that a fair amount of this money will also come into the economy. The dollars will come into the economy to pay salaries, to buy, different things, and to pay for different infrastructure. And that should actually be supportive of the shilling versus the dollar. So it's a positive outlook, and hopefully the investments go through on time, so that the economy starts to materially grow, and a lot of hope is pinned on oil in the current state. Thank you.
Thank you, Phil, for handling that. We couldn't quite leave the stage without talking oil and gas. Aaron, I'll come to you. My final question to you is, a lot of opportunity has come through the results of the barometer, and as we've spoken a lot about opportunity in the East African corridor, but generally in the region. How is Stanbic Bank positioned to support SMEs, take charge, take advantage of this opportunity, seeing as you are at the realm of SME business?
Thank you. Our commitment to SMEs is at an all-time high. There was a time where maybe we didn't understand SMEs, but over the last few years we have done the research, we've gone down to the ground and had conversations and come up with solutions to try and support our SMEs to have meaningful growth. The first point is around the Stanbic Business Incubator, right? And completely non-profit entity within the bank that is geared towards supporting our SMEs to get to a better compliance level, to achieve, to build their capacity to self-sustain. Our SMEs, average age, most of them don't make it to their first birthday. It's not big, sometimes it's capital, sometimes it's other issues, but to try and address those issues, you have to put in the work. Now, if you do a study, if you look at the barometer, it shows that access to credit has actually gone up, right? But if you study how that access to credit is going up, the funding costs are still quite high because there's been this very high cost of lending for an SME. It's very difficult for an SME to make any money from there. So as a bank, our commitment is to come in to provide SMEs with the working capital that they need, to provide SMEs with the trade services that they need and solutions that they need, to link our SMEs to other markets. So we've just set up a trans-regional team that is seated, the trans-regional head for East Africa is in Tanzania. We are linking SMEs in Uganda. There's over 230 SMEs already that we have linked between Uganda, Kenya, Tanzania, introducing them to seamless payments, seamless transactions, providing them with working capital services. But even beyond the regional opportunity, we have a full-fledged Africa-China opportunity where our SMEs are able to be linked to manufacturers in China where they don't have to go through intermediaries and third parties. They can go directly to source. Most of our SMEs are not doing that. And the more that particular proposition goes, the more impact we can have. So there's quite a bit that we're trying to do with our SMEs, both from how do we try to reduce the cash and the risk that comes with cash through FlexiPay, a very interesting solution that's designed with an SME in mind. How do we think about access to finance that is sustainable, that is low cost, that can solve both short-term and long-term working capital gaps? How do we think about linkages to new markets, linkages or access to information? It's quite a bit. But the end of it is we are fully committed to our SMEs. We are fully committed to supporting these SMEs to grow, and being the #1 entrepreneurial country in the world, the onus is on us to ensure that we drive that and turn their possibilities into opportunities. Thank you.